All right, guys. So I'm joined here by my good friend and fellow analyst and trader, Zach Meir. Zach, of course, has been a trader and also has been a chart analyst for many years, going back 30 years with experience going back to the 1980s. But guys, I want to talk to Zach about this. Zach, I want to talk to you about this because everyone's speculating about what could cause the next major crash, what could cause the next major financial crisis. We had a late 1980s boom followed by the 1987 crash. Zach, can you tell me, in your opinion, what could cause the next major financial crisis? We've had the tech bubble of the year 2000. We had the housing bubble of the year 2008, 2007. What could be the next one? I put some potential scenarios here. The last one is a joke, obviously. I don't mean it to be serious, but it could be China, Brexit, EU division, war, or a tweet from the president. Zach, your take on this?
Well, the way we're looking at it would be all of the above, actually. We actually are in a scenario where potentially you could have all those running in parallel.
Right. Well, are you seriously suggesting that even a tweet from the president could send us into a financial crisis? I mean, that was a joke. I mean, but I mean,
no, but I mean, him reacting badly to one of the other four could be something which will hurt the stock market. Especially if he might tweet and he's going to resign or something like that. You know? So they got those situations. But no, but the other four can be. For instance, not war, but you can have tension, the Iran tension, North Korea tension can escalate. It doesn't have to go to actual, firing of missiles. EU crisis. I mean, you could in a way argue that at least three of those we're already feeling that, and the market is still very resilient to them. So
that's a good point.
I think there's the real thing which would hurt the market would be the way of looking at it, I think correctly, is to say, well, if interest rates went up and had to go up for some reason, then the market, that would be the end of the stock market. I mean, that would kill the market. And in fact, we had a taste of that in December because ahead of Jerome Powell blinking, which he did, when the stock market, I think it was early January, first few days of January, something like that, he blinked. The Fed put came in, and he relaxed his hawkish stance. But at some point, the market, he will have to change his tune. I mean, they'll have to go heavier on the tightening and heavier on the interest rates. Even taking money out of the system could be enough taking liquidity out of the system. The reverse QE could be enough to bring down the market. So I think. To me, I think it's to do with monetary policy and interest rates, which you actually haven't put on the on that selection.
It's an interesting point. I absolutely, you're right, and I should have included that as well. And one of our members actually mentioned tonight. Christian says that credit cards and student loans. It's a good point. There's a lot of debts from there as well.
Yeah, I think it's China's debt, China imploding, really, which is the main one. I mean, they managed to kick the can down the road, and I don't think anybody who's sane believes their GDP figure of 6% or 7% or whatever it's supposed to be. I think China is probably lucky to be 1 or 2% really in terms of what it's doing. Even if it's, I mean, I don't see how Apple and other companies operating in China can be having a severe slowdown with an economy which is supposed to be growing at 6%.
Yeah.
Doesn't make any sense. The Chinese economy must be contracting, and so I think at some point that is going to be the issue. And it's enough for a correction anyway. I think. And also, if you look at it, I mean, China is in 2019 what Japan was, 20, 30 years ago. So.
Yeah, I have to say I agree with our members. I personally think that China is a more likely scenario, either Chinese debt, some kind of debt crisis in China, or possibly trade war with China. But I agree with our members. I think the second most likely scenario could be the EU crisis again. We've seen before Greece causing major turmoil, the UK Brexit thing, but also maybe Italy down the line, maybe a Portugal. Who knows? We don't know what's happening across the EU. I don't think that a war is going to cause a crisis. In fact, the opposite. We've seen before that actually wars tend to cause the stock market to go up. So wars actually, I know I hate to say this, it's terrible, but wars seem to benefit the stock market. It's ghastly, it's evil, I know, but that's the way it is. Wars actually help the stock market, not the other way around. We've seen it happening, for example, with Iraq back in the early 2000s, for example. And by the way, guys, I'll let you know that Zach is also going to be posting his own crypto and Bitcoin report every 2 weeks, every fortnight for our members. So if you're not a member, become a member. And guys, make sure you watch the recording of our members video of the 2019 predictions as well, forecast for 2019.